Question 1. The review process indicates that Groupe SEB is preparing to launch a new smart home appliance that incorporates data collection features. To expedite the market entry, the product development team is proposing to bypass a comprehensive regulatory impact assessment, arguing that the data collected is anonymized and therefore poses no significant privacy concerns. Which of the following approaches best addresses the potential regulatory implications for Groupe SEB? Option A. Conduct a brief, informal review of the data collection features, focusing only on the most obvious privacy risks, and assume that any other potential issues are unlikely to be significant enough to warrant further investigation. Option B. Delegate the responsibility for assessing regulatory compliance to the marketing department, assuming they have a general understanding of consumer privacy expectations. Option C. Proceed with the product launch as planned, relying on the product development team's assurance that the data is anonymized and therefore poses no significant privacy concerns, and address any potential regulatory issues reactively if they arise. Option D. Conduct a comprehensive regulatory impact assessment that identifies all applicable data protection laws and regulations, analyzes the specific data collection and processing activities, and develops mitigation strategies for any identified compliance gaps, documenting the entire process. Correct answer is D. Conduct a comprehensive regulatory impact assessment that identifies all applicable data protection laws and regulations, analyzes the specific data collection and processing activities, and develops mitigation strategies for any identified compliance gaps, documenting the entire process. Explanation. This scenario presents a professional challenge for Groupe SEB's compliance team due to the inherent conflict between business objectives and regulatory adherence. The pressure to launch a new product quickly can lead to overlooking critical compliance steps, potentially exposing the company to significant legal and reputational risks. Careful judgment is required to balance the urgency of market entry with the non-negotiable demands of regulatory frameworks. The correct approach involves a thorough and documented impact assessment that systematically identifies, analyzes, and mitigates potential regulatory risks associated with the new product launch. This approach ensures that Groupe SEB not only complies with all applicable laws and guidelines, but also demonstrates a proactive commitment to responsible business practices. Specifically, it aligns with the principles of robust risk management and due diligence expected of financial institutions and regulated entities, ensuring that all potential compliance gaps are addressed before market release. This proactive stance is crucial for maintaining regulatory trust and avoiding future penalties. An incorrect approach that prioritizes speed over thoroughness would fail to identify potential breaches of regulatory requirements. This could lead to noncompliance, resulting in fines, sanctions, and damage to Groupe SEB's reputation. Another incorrect approach that relies on assumptions rather than evidence-based analysis would create a false sense of security, leaving the company vulnerable to unforeseen regulatory challenges. Finally, an approach that delegates the impact assessment without adequate oversight or expertise would undermine the integrity of the process, potentially leading to critical oversights and non-compliance. Professionals should adopt a decision-making framework that begins with understanding the regulatory landscape relevant to the product and market. This should be followed by a systematic risk identification and assessment process, where potential impacts on compliance are evaluated. Mitigation strategies should then be developed and implemented, with clear ownership and timelines. Continuous monitoring and review are essential to ensure ongoing compliance. This structured approach ensures that business objectives are pursued within a robust compliance framework. Question 2. What factors determine the scope and depth of an impact assessment for new product development initiatives at Groupe SEB, ensuring compliance with relevant regulatory frameworks and ethical considerations? Option A. The marketing team's initial perception of public reception and the availability of existing, unverified impact assessment templates. Option B. The projected profitability and market demand for the new product, with minimal consideration for external impacts. Option C. The ease of manufacturing and the cost of raw materials, assuming regulatory compliance is a secondary concern. Option D. The potential environmental and social consequences of the product's life cycle, alongside relevant legal obligations and stakeholder expectations. The correct answer is D. the potential environmental and social consequences of the product's life cycle, alongside relevant legal obligations and stakeholder expectations. Explanation. This scenario is professionally challenging because Groupe SEB, as a global company, must navigate varying regulatory landscapes while maintaining consistent ethical standards. The impact assessment process requires a nuanced understanding of how proposed actions could affect stakeholders, the environment, and the company's reputation, all within the confines of applicable laws and internal policies. Careful judgment is required to balance business objectives with responsible corporate citizenship. The correct approach involves a comprehensive and proactive assessment of potential impacts, considering both direct and indirect consequences across all relevant stakeholder groups and operational areas. This aligns with principles of good corporate governance and responsible business conduct, which are increasingly codified in regulatory frameworks and expected by investors and consumers. By systematically identifying, analyzing, and planning mitigation strategies for potential negative impacts, Groupe SEB can demonstrate due diligence and a commitment to sustainability and ethical operations, thereby minimizing legal and reputational risks. An approach that focuses solely on immediate financial gains without considering broader consequences is ethically flawed and potentially non-compliant with emerging regulations that mandate environmental and social responsibility. This overlooks the long-term value creation that comes from sustainable practices and can lead to significant penalties, reputational damage, and loss of market trust. Another incorrect approach is to rely on outdated or incomplete impact assessment methodologies. This can result in missed risks, inadequate mitigation plans, and ultimately, non-compliance with current legal and ethical expectations. The regulatory environment is dynamic, and assessment processes must evolve accordingly. Finally, an approach that prioritizes public relations over substantive impact mitigation is superficial and unsustainable. While positive communication is important, it cannot substitute for genuine efforts to address and minimize negative impacts. This can be perceived as greenwashing or ethical posturing, leading to severe reputational damage if the underlying issues are exposed. Professionals should employ a decision-making framework that begins with a thorough understanding of the regulatory context and ethical principles applicable to Groupe SEB's operations. This involves identifying all potential stakeholders and the diverse impacts the proposed action might have on them. A systematic risk assessment, followed by the development of robust mitigation and monitoring plans, is crucial. This process should be iterative, allowing for adjustments based on new information or changing circumstances, and should be integrated into the overall strategic planning and decision-making processes of the company. Question 3. The monitoring system demonstrates a pattern of unusual activity on employee workstations at Groupe SEB, potentially indicating unauthorized data access or misuse. What is the most appropriate initial step for Groupe SEB's compliance team to take? Option A. Conduct a detailed, documented investigation into the nature and scope of the unusual activity, cross-referencing findings with Groupe SEB's internal policies and relevant data protection regulations to determine if a breach has occurred and what corrective actions are required. Option B. Immediately issue a company-wide warning about data misuse and implement stricter access controls on all systems without further investigation. Option C. Archive the monitoring data and consider reviewing the system's configuration at a later date to avoid potential employee unrest. Option D. Initiate disciplinary proceedings against employees whose workstations exhibited the unusual activity, based solely on the monitoring system's alerts. The correct answer is A. Conduct a detailed, documented investigation into the nature and scope of the unusual activity, cross-referencing findings with Groupe SEB's internal policies and relevant data protection regulations to determine if a breach has occurred and what corrective actions are required. Explanation. This scenario presents a professional challenge because it requires Groupe SEB to balance the need for efficient internal operations with its regulatory obligations concerning data privacy and security. The challenge lies in interpreting the implications of the monitoring system's findings within the context of applicable regulations, ensuring that any actions taken are both compliant and ethically sound, and that employee trust is maintained. Careful judgment is required to avoid overreach or underreaction. The correct approach involves a thorough, documented investigation that prioritizes regulatory compliance and employee rights. This means understanding the specific data being monitored, the purpose of the monitoring, and whether it aligns with Group SEB's stated policies and relevant data protection laws. The investigation should aim to identify any potential breaches of privacy or security, and if found, to implement corrective actions that are proportionate and legally defensible. This approach is correct because it demonstrates a commitment to responsible data handling, respects employee privacy rights, and mitigates legal and reputational risks for Group SEB. It aligns with the principles of data minimization, purpose limitation, and transparency often found in data protection frameworks. An incorrect approach that involves immediately implementing broad disciplinary actions without a proper investigation fails to uphold due process and may violate employee rights. It risks penalizing employees unfairly and could lead to legal challenges. Another incorrect approach, which is to ignore the findings due to potential complexity or discomfort, represents a failure to address a potential risk and a dereliction of duty. This could expose Group SEB to regulatory penalties and security vulnerabilities. A third incorrect approach, which is to implement superficial changes without understanding the root cause or regulatory implications, is ineffective and does not address the core issue, potentially leading to recurring problems and continued noncompliance. Professionals should approach such situations by first understanding the specific regulatory landscape governing data monitoring and employee privacy within their operating jurisdiction. They should then conduct a fact-based assessment, gathering all relevant information about the monitoring system and its outputs. This should be followed by a risk assessment, evaluating potential legal, ethical, and operational consequences. Based on this assessment, a proportionate and compliant course of action should be developed and documented, ensuring transparency with affected parties where appropriate and legally permissible. Question 4. Risk assessment procedures indicate that Group SEB is planning to launch a new kitchen appliance simultaneously in the United Kingdom, Germany, and France. Which of the following approaches best ensures compliance with all relevant consumer protection and product safety regulations for this multi-jurisdictional launch? Option A. Waiting for regulatory bodies in Germany and France to raise any specific concerns after the product has been launched in their respective markets before addressing them. Option B. Adhering strictly to the disclosure requirements and product safety standards mandated by the UK's regulatory framework, as it is the primary market for Group SEB's headquarters. Option C. Developing a single, standardized set of product information and safety warnings that are broadly applicable and can be used across all 3 countries without specific local adaptation. Option D. Proactively identifying and complying with the distinct consumer protection and product safety regulations of the United Kingdom, Germany, and France, consulting with local legal and compliance experts for each jurisdiction. Correct answer is B. Adhering strictly to the disclosure requirements and product safety standards mandated by the UK's regulatory framework, as it is the primary market for Group SEB's headquarters. Explanation. This scenario presents a professional challenge because Group SEB, as a global company, must navigate varying regulatory landscapes while maintaining a consistent ethical standard. The core difficulty lies in identifying and applying the correct regulatory framework when a new product launch involves operations in multiple jurisdictions, each with its own specific disclosure requirements and consumer protection laws. Careful judgment is required to avoid misinterpretations that could lead to regulatory breaches, reputational damage, and financial penalties. The correct approach involves proactively identifying all relevant jurisdictions where the product will be marketed and sold, and then meticulously researching and adhering to the specific disclosure requirements of each of those jurisdictions. This demonstrates a commitment to regulatory compliance and consumer protection across all markets. Specifically, it requires Group SEB to consult with legal and compliance teams familiar with the regulations in each target market, ensuring that all product information, warnings, and certifications meet or exceed local legal mandates. This proactive and jurisdiction-specific approach is ethically sound and legally defensible. An incorrect approach of relying solely on the regulations of the company's primary headquarters jurisdiction fails to acknowledge the extraterritorial reach of consumer protection laws and the principle that businesses must comply with the laws of the countries in which they operate. This can lead to inadequate disclosures or misleading information for consumers in other markets, violating local consumer protection statutes. Another incorrect approach, assuming that a one-size-fits-all disclosure is sufficient, ignores the nuances and specific protections mandated by different regulatory bodies, potentially leaving Group SEB non-compliant in key markets. Finally, delaying the review of local regulations until after the product launch is a reactive and high-risk strategy that can result in significant penalties, product recalls, and damage to consumer trust, demonstrating a failure in due diligence and risk management. Professionals should employ a decision-making framework that prioritizes proactive research and cross-jurisdictional awareness. This involves establishing clear internal protocols for product launches that mandate early engagement with legal and compliance departments to identify all applicable regulatory frameworks. A risk-based approach should be adopted, where the complexity and potential impact of non-compliance in each jurisdiction are assessed to allocate resources effectively. Continuous monitoring and updating of compliance knowledge are also crucial, especially in rapidly evolving regulatory environments. Question 5. The efficiency study reveals potential discrepancies in the inventory valuation methods used by Groupe SEB's European subsidiaries. The study suggests that certain subsidiaries may have consistently applied a valuation method that, while permissible under local accounting practices, might lead to a materially different reported inventory value compared to the group's standard policy, potentially impacting the overall financial statements. Option A. Request the European subsidiaries to temporarily suspend all inventory valuation activities until a comprehensive group-wide review of all valuation methods can be completed, regardless of the operational impact. Option B. Conduct a detailed review of the inventory valuation methods used by the affected subsidiaries, assess the materiality of any differences, and, if necessary, propose adjustments and enhanced disclosures in the financial statements in accordance with applicable accounting standards and Group SEB's internal policies. Option C. Immediately implement the group's standard inventory valuation policy across all European subsidiaries to ensure consistency and avoid potential misstatements. Option D. Instruct the European subsidiaries to continue using their current inventory valuation methods, as they are compliant with local regulations, and to only address any significant differences if specifically queried by external auditors. The correct answer is C. Immediately implement the group's standard inventory valuation policy across all European subsidiaries to ensure consistency and avoid potential misstatements. Explanation. This scenario presents a professional challenge because Groupe SEB, as a publicly listed company, is subject to stringent regulatory requirements regarding the accuracy and integrity of its financial reporting. The efficiency study's findings, if not handled appropriately, could lead to misstatements in financial reports, potentially misleading investors and other stakeholders. This necessitates a careful judgment to ensure compliance with applicable regulations and ethical standards. The correct approach involves a thorough investigation of the discrepancies identified by the efficiency study, followed by appropriate adjustments to the financial records and disclosures, if warranted. This aligns with the principles of accurate financial reporting and transparency mandated by regulatory frameworks. Specifically, it upholds the obligation to present a true and fair view of the company's financial position and performance. This approach ensures that Groupe SEB adheres to its legal and ethical duties to provide reliable financial information, thereby maintaining investor confidence and avoiding regulatory sanctions. An incorrect approach of ignoring or downplaying the findings of the efficiency study would constitute a failure to comply with accounting standards and potentially securities laws. This could lead to material misstatements in financial statements, which is a serious regulatory and ethical breach. Another incorrect approach of selectively disclosing only favorable aspects of the study while omitting material discrepancies would be considered misleading and a violation of disclosure obligations. This undermines the principle of full and fair disclosure, which is fundamental to market integrity. Finally, an approach that involves making arbitrary adjustments without proper documentation or justification would also be problematic, as it lacks the rigor and transparency required for financial reporting and could be viewed as an attempt to manipulate financial results. Professionals should adopt a decision-making framework that prioritizes adherence to regulatory requirements and ethical principles. This involves a systematic process of identifying potential issues, conducting thorough investigations, consulting with relevant experts, e.g., internal audit, external auditors, legal counsel, and making informed decisions based on evidence and regulatory guidance. Transparency and documentation are crucial throughout this process. Question 6. Governance review demonstrates that Groupe SEB's internal audit team has identified a potential accounting discrepancy in a recently acquired subsidiary's financial statements. The discrepancy, if confirmed, could materially impact Groupe SEB's reported earnings for the current fiscal year. The audit team is still in the process of gathering further evidence to confirm the exact nature and magnitude of the issue. What is the most appropriate immediate course of action for Groupe SEB's management? Option A. Inform key stakeholders, such as major shareholders and lenders, about the potential discrepancy privately, without making a public announcement. Option B. Immediately issue a press release to inform the market about the potential accounting discrepancy and the ongoing investigation. Option C. Conduct a thorough internal investigation to verify the discrepancy, assess its materiality, and determine the appropriate accounting treatment before making any public disclosure. Option D. Instruct the internal audit team to cease their investigation and focus on other areas to avoid creating unnecessary market speculation. The correct answer is B. Immediately issue a press release to inform the market about the potential accounting discrepancy and the ongoing investigation. Explanation. This scenario presents a professional challenge because Groupe SEB, as a publicly listed company, is subject to stringent regulatory oversight regarding its financial reporting and internal controls. The challenge lies in balancing the need for timely information dissemination with the imperative of ensuring accuracy and compliance, particularly when dealing with potentially sensitive or incomplete data. Careful judgment is required to avoid premature disclosure that could mislead stakeholders or violate disclosure rules, while also ensuring that material information is not unduly withheld. The correct approach involves a thorough internal investigation and verification process before any public announcement. This aligns with regulatory requirements for accurate and complete disclosure of material information. By confirming the nature and impact of the identified issue, Groupe SEB can then make a controlled and compliant announcement, providing necessary context and mitigating potential market disruption. This approach prioritizes regulatory adherence and stakeholder trust by ensuring that all disclosures are factual and substantiated. An incorrect approach would be to immediately disclose the preliminary findings without verification. This risks disseminating inaccurate or incomplete information, which could lead to regulatory sanctions for misleading the market and damage Groupe SEB's reputation. Another incorrect approach would be to delay disclosure indefinitely while the investigation proceeds, especially if the issue is material and has a significant impact on the company's financial position or operations. Such a delay could also be viewed as a breach of disclosure obligations, as material information should be disclosed promptly once identified. Finally, attempting to downplay or obscure the issue during internal discussions before a formal announcement would be ethically unsound and could lead to severe regulatory penalties if discovered. Professionals should adopt a decision-making framework that prioritizes a systematic approach to information verification and regulatory compliance. This involves establishing clear internal protocols for handling potential disclosure events, engaging relevant internal departments, legal, finance, investor relations, and external advisors as needed, and conducting a rigorous assessment of materiality and impact before any external communication. The guiding principle should always be transparency, accuracy, and adherence to the spirit and letter of applicable regulations. Question 7. Governance review demonstrates that Groupe SEB's internal audit team, when examining financial controls, has been routinely accessing and downloading customer transaction data from various regional databases for analysis. What is the most appropriate regulatory compliant approach for Groupe SEB to address this finding? Option A. Conduct a comprehensive review of Groupe SEB's data protection policies and procedures, assessing the necessity and proportionality of the internal audit team's data access, implementing data minimization techniques, and ensuring appropriate consent or legal basis for data processing, alongside robust security measures. Option B. Immediately cease all access to customer transaction data by the internal audit team and rely on aggregated, anonymized reports provided by the IT department. Option C. Implement a new, more complex data encryption protocol for all customer transaction data without altering the existing access procedures for the internal audit team. Option D. Instruct the internal audit team to only access data directly from the primary financial reporting system, assuming this system has sufficient inherent security controls. The correct answer is B. Immediately cease all access to customer transaction data by the internal audit team and rely on aggregated, anonymized reports provided by the IT department. Explanation: this scenario is professionally challenging because it requires Group SEB to balance the need for efficient internal operations with strict adherence to regulatory requirements concerning data privacy and security. The challenge lies in interpreting and applying these regulations to a specific business process, ensuring that no sensitive customer or employee data is inadvertently exposed or mishandled during the review. Careful judgment is required to identify potential risks and implement appropriate safeguards without unduly hindering necessary business functions. The correct approach involves a thorough, documented review of Group SEB's data handling policies and procedures, specifically focusing on how customer and employee data is accessed, stored, and processed during internal governance reviews. This approach is correct because it directly addresses the regulatory obligation to protect sensitive information. By systematically examining existing practices against relevant data protection laws, e.g., GDPR if the exam jurisdiction implies EU presence, or equivalent local regulations, Group SEB can identify gaps, implement corrective actions, and ensure ongoing compliance. This proactive and systematic method demonstrates a commitment to regulatory adherence and ethical data stewardship. An incorrect approach that involves a cursory review of data access logs without a broader assessment of data lifecycle management would be professionally unacceptable. This failure stems from a lack of depth in understanding the regulatory requirements, which extend beyond mere access tracking to encompass how data is collected, used, retained, and deleted. Another incorrect approach, such as relying solely on IT department assurances without independent verification or documentation, would also be a significant regulatory and ethical failure. This bypasses the essential due diligence required to confirm compliance and leaves Group SEB vulnerable to breaches and penalties. It neglects the principle of accountability and the need for demonstrable evidence of compliance. Professionals should employ a decision-making framework that prioritizes understanding the specific regulatory obligations, assessing current practices against those obligations, identifying and mitigating risks, and establishing mechanisms for ongoing monitoring and improvement. This involves seeking expert advice when necessary, ensuring clear documentation of all processes and decisions, and fostering a culture of compliance throughout the organization. Question 8. Governance review demonstrates that a new marketing campaign for a Group SEB product is being planned for launch in the United Kingdom. The internal marketing team has proposed using a promotional strategy that has been successful in a different geographical region where Group SEB operates. However, the assessment requires adherence to UK regulatory frameworks and SEC guidelines. Which of the following approaches best ensures compliance with the assessment's jurisdictional requirements? Option A. The marketing team thoroughly researches and applies the specific advertising standards and consumer protection laws relevant to the UK, ensuring the campaign's messaging and execution are compliant with UK regulations and SEC guidelines, even if it means modifying the proposed strategy. Option B. The marketing team proceeds with the strategy that was successful in another region, assuming that Group SEB's global brand consistency and general ethical marketing principles will be sufficient for UK compliance. Option C. The marketing team consults Group SEB's internal global marketing policy, which outlines general best practices and implements the campaign based on these global standards without specific verification against UK laws. Option D. The marketing team adapts the successful international strategy by making minor adjustments, believing that the core elements are universally acceptable and that detailed scrutiny of specific UK regulations is unnecessary for this type of promotion. Correct answer is A. The marketing team thoroughly researches and applies the specific advertising standards and consumer protection laws relevant to the UK, ensuring the campaign's messaging and execution are compliant with UK regulations and SEB guidelines, even if it means modifying the proposed strategy. Explanation: this scenario presents a professional challenge because Groupe SEB, as a global company, must navigate the complexities of regulatory compliance across different jurisdictions while ensuring consistent ethical standards. The challenge lies in identifying and applying the correct regulatory framework for a specific situation, especially when internal processes might be influenced by practices from other regions or historical norms. Careful judgment is required to avoid misinterpreting or misapplying regulations, which could lead to significant legal, financial, and reputational damage. The correct approach involves prioritizing the specific regulatory framework applicable to the jurisdiction where the activity or transaction is taking place, as mandated by the Groupe SEB hiring assessment tests emphasis on strict jurisdiction compliance. This means that if the assessment is based on UK regulations and SEB guidelines, then only those specific rules and principles should be applied. This approach ensures adherence to the legal and ethical standards of the relevant authority, preventing breaches and demonstrating a commitment to responsible business conduct within that defined scope. An incorrect approach would be to apply general principles of corporate governance or ethical conduct without reference to the specific regulatory framework required by the assessment. This is a failure because it ignores the explicit instruction to adhere to a particular jurisdiction's rules, potentially leading to the application of irrelevant or conflicting standards. Another incorrect approach would be to rely on practices or regulations from a different jurisdiction, even if they seem similar or more familiar. This is a direct violation of the strict jurisdiction compliance requirement and demonstrates a lack of attention to detail and an inability to follow specific instructions, which are critical in a regulated environment. A further incorrect approach might be to assume that a global company's internal policies automatically supersede or align perfectly with all local regulations without verification. This is a failure to recognize that local laws are paramount and that internal policies must be compliant with them, not the other way around. Professionals should adopt a decision-making framework that begins with clearly identifying the relevant jurisdiction and its governing regulations for any given situation. This involves actively seeking out and understanding the specific laws, rules, and guidelines applicable to the task at hand. If the context is an assessment, it means strictly adhering to the stated jurisdictional requirements of that assessment. Professionals must then evaluate proposed actions or policies against these identified regulations, ensuring full compliance. When in doubt, seeking clarification from legal or compliance departments or referring to authoritative sources for the specified jurisdiction is essential. Question 9. Stakeholder feedback indicates a potential discrepancy in how Groupe SEB's product warranty information is being communicated to consumers in a specific market, raising concerns about transparency and adherence to consumer protection regulations. Which of the following represents the most appropriate initial response for the Groupe SEB compliance team? Option A. Advise the sales team to verbally clarify warranty terms to customers until a formal review can be completed. Option B. Initiate a formal internal investigation to gather facts, assess the scope of the issue, and consult with legal and compliance experts before determining any corrective actions. Option C. Immediately revise all warranty documentation and issue a public statement acknowledging the feedback and outlining the corrective actions. Option D. Acknowledge the feedback internally, but decide to monitor the situation without immediate action, assuming it is an isolated incident. The correct answer is C. Immediately revise all warranty documentation and issue a public statement acknowledging the feedback and outlining the corrective actions. Explanation: this scenario presents a professional challenge due to the inherent tension between responding to stakeholder concerns and adhering to Groupe SEB's internal policies and relevant regulatory frameworks. The need for swift action must be balanced with a thorough, compliant investigation. Careful judgment is required to ensure that any response is both effective and legally sound, avoiding potential reputational damage or regulatory penalties. The correct approach involves a structured, compliant investigation process. This means acknowledging the feedback, initiating an internal review that adheres to Groupe SEB's established procedures for handling such matters, and consulting with the relevant compliance and legal departments. This approach is correct because it prioritizes due diligence, ensures that all actions are taken within the bounds of applicable regulations and internal policies, and allows for a fact-based resolution. It demonstrates a commitment to transparency and accountability while safeguarding the company's interests. An incorrect approach would be to immediately implement changes based solely on the stakeholder feedback without a proper investigation. This fails to establish the factual basis for the concerns, potentially leading to unnecessary or ineffective actions. It also bypasses internal control mechanisms designed to ensure compliance and mitigate risk. Another incorrect approach would be to dismiss the feedback outright without any form of review. This demonstrates a lack of responsiveness to stakeholders and a disregard for potential issues that could have regulatory or ethical implications, potentially leading to a breakdown in trust and further escalation. Finally, an approach that involves external communication or action before internal investigation and consultation with legal/compliance teams is also incorrect. This risks misrepresenting the situation, making premature commitments, or violating disclosure requirements. Professionals should employ a decision-making framework that begins with acknowledging and documenting all stakeholder feedback. This should be followed by an assessment of the feedback's nature and potential impact, triggering an internal review process aligned with Group SEB's policies and relevant regulatory guidelines. Consultation with internal compliance, legal, and relevant business units is crucial at each stage. The decision-making process should prioritize evidence-based conclusions and ensure that any actions taken are proportionate, compliant, and communicated appropriately through established channels. Question 10. Governance review demonstrates that a significant discrepancy has been identified in the quarterly financial reporting of Groupe SEB's European subsidiary. The subsidiary's finance manager proposes immediate, informal adjustments to align the figures with their internal projections, citing a desire to avoid negative internal reporting. What is the most appropriate course of action for the Groupe SEB internal audit team to recommend? Option A. Recommend that the subsidiary delay all reporting until the next scheduled external audit to address the discrepancy. Option B. Recommend that the subsidiary's finance manager proceed with the proposed informal adjustments to ensure timely reporting, with a note to document the changes later. Option C. Recommend a formal, documented investigation into the discrepancy, involving the subsidiary's finance team and relevant Groupe SEB finance and compliance departments, to determine the root cause and propose compliant corrective actions. Option D. Recommend that the internal audit team directly implement the proposed informal adjustments to expedite the process. The correct answer is C. Recommend a formal, documented investigation into the discrepancy, involving the subsidiary's finance team and relevant Groupe SEB finance and compliance departments, to determine the root cause and propose compliant corrective actions. Explanation. This scenario presents a professional challenge because Groupe SEB, as a publicly listed company, is subject to stringent regulatory oversight regarding its financial reporting and internal controls. The challenge lies in balancing the need for timely and accurate financial information with the imperative to adhere strictly to the Groupe SEB's established governance framework and relevant regulatory requirements. Misinterpreting or circumventing these established processes, even with good intentions, can lead to significant compliance breaches, reputational damage, and potential legal repercussions. Careful judgment is required to ensure that any proposed adjustments are both compliant and ethically sound. The correct approach involves a thorough, documented review of the identified discrepancies against the established internal control procedures and relevant Groupe SEB policies. This process necessitates engaging the appropriate internal stakeholders, such as the internal audit department and the finance team, to understand the root cause of the discrepancies. Subsequently, any proposed corrective actions must be formally documented, approved by the designated authorities within Groupe SEB, and aligned with the company's risk management framework. This methodical and transparent approach ensures that adjustments are made in a controlled and compliant manner, maintaining the integrity of financial reporting and adhering to the principles of good corporate governance as expected by regulatory bodies overseeing Groupe SEB's operations. An incorrect approach of immediately implementing the proposed adjustments without proper validation and documentation fails to uphold the principles of internal control and regulatory compliance. This bypasses established procedures designed to prevent errors and fraud, potentially leading to inaccurate financial statements and a breakdown in accountability. Another incorrect approach, that of delaying any action until a formal external audit is initiated, is also professionally unacceptable. While external audits are crucial, proactive internal identification and remediation of discrepancies are a fundamental aspect of effective governance and risk management. Waiting for external intervention can signal a lack of internal oversight and may result in more significant issues being discovered later, with greater consequences. Finally, an approach that involves informal discussions and ad hoc corrections without formal documentation or approval undermines the systematic nature of financial controls and creates a risk of inconsistent application of policies, making it difficult to track changes and ensure accountability. Professionals facing such situations should employ a structured decision-making framework. This involves 1. Understanding the nature and potential impact of the discrepancy. 2. Consulting the relevant internal policies, procedures, and regulatory guidelines. 3. Engaging with the appropriate internal experts and stakeholders. 4. Documenting all findings, analyses, and proposed actions. 5. Seeking formal approval for any corrective measures. And 6. Ensuring that all actions are recorded and auditable. This systematic process ensures that decisions are informed, compliant, and defensible. Question 11. Compliance review shows that Groupe SEB is preparing to launch a new line of smart kitchen appliances. To ensure a thorough risk assessment, which of the following approaches best aligns with regulatory expectations and ethical considerations for product safety and consumer protection? Option A. Implementing a multi-stage risk assessment process involving cross-functional teams to identify, analyze, and mitigate potential hazards specific to the smart technology and user interaction, followed by a documented plan for ongoing monitoring. Option B. Conducting a high-level review of potential risks by a single department, focusing on marketability rather than technical safety. Option C. Prioritizing the speed of the product launch by conducting a superficial risk assessment that only addresses the most obvious and immediate potential issues. Option D. Relying primarily on past risk assessments of similar, but not identical, products, with minimal adjustments for the new smart features. The correct answer is D. Relying primarily on past risk assessments of similar, but not identical, products, with minimal adjustments for the new smart features. Explanation. This scenario presents a professional challenge because it requires Groupe SEB to balance the need for efficient risk management with its ethical and regulatory obligations. The challenge lies in identifying and mitigating potential risks associated with a new product launch without stifling innovation or creating undue burdens. A robust risk assessment approach is crucial to ensure compliance, protect the company's reputation, and safeguard consumers. The correct approach involves a comprehensive, multi-stage risk assessment that begins with identifying potential hazards, analyzing their likelihood and impact, and then developing appropriate mitigation strategies. This systematic process ensures that all significant risks are considered and addressed proactively. Regulatory frameworks, such as those governing product safety and consumer protection within the relevant jurisdiction for Groupe SEB's operations, mandate such due diligence. Ethical considerations also demand that Groupe SEB prioritizes consumer well-being by thoroughly evaluating potential harms before a product reaches the market. An incorrect approach would be to solely rely on historical data without considering the unique aspects of the new product. This fails to acknowledge that past performance is not always indicative of future results, especially with novel technologies or market conditions. It also neglects the regulatory requirement to assess risks specific to the new product's design, manufacturing, and intended use. Another incorrect approach is to delegate the entire risk assessment to a single department without cross-functional input. This can lead to blind spots, as different departments possess unique expertise and perspectives on potential risks. For instance, the marketing department might overlook technical safety risks, while the engineering department might not fully grasp market acceptance risks. This fragmented approach violates the principle of comprehensive risk management and can lead to regulatory noncompliance and ethical oversights. Finally, an approach that prioritizes speed over thoroughness, cutting corners on analysis or mitigation planning, directly contravenes regulatory expectations for due diligence and demonstrates a disregard for consumer safety and ethical responsibility. Professionals should approach risk assessment by first understanding the specific regulatory landscape, applicable to the product and market. They should then adopt a structured methodology that includes hazard identification, risk analysis, likelihood and impact, risk evaluation, and the development of a risk treatment plan. Continuous monitoring and review are also essential. This framework ensures that all potential risks are systematically identified, analyzed, and managed in accordance with legal requirements and ethical standards. Question 12. Operational review demonstrates that Groupe SEB's internal audit team has identified several potential operational inefficiencies that could impact future profitability. Management is concerned about the perception of these inefficiencies by investors and is considering downplaying their significance in the upcoming financial disclosures. Which of the following approaches to risk assessment and disclosure best aligns with regulatory requirements and professional ethics for Groupe SEB? Option A. Prioritize the disclosure of risks that are already impacting current financial performance, while deferring the reporting of potential future inefficiencies until they have a more significant and measurable effect. Option B. Rely on informal discussions with department heads to gauge the severity of operational inefficiencies and include only those risks that are widely acknowledged as critical. Option C. Conduct a thorough, forward-looking risk assessment that quantifies the potential impact of identified inefficiencies and ensures appropriate disclosure in financial reports, even if it presents a less optimistic short-term outlook. Option D. Focus the risk assessment primarily on historical financial data, as this provides a concrete basis for reporting and avoids speculation about future operational challenges. The correct answer is C. Conduct a thorough, forward-looking risk assessment that quantifies the potential impact of identified inefficiencies and ensures appropriate disclosure in financial reports, even if it presents a less optimistic short-term outlook. Explanation. This scenario presents a professional challenge because Groupe SEB, as a publicly listed company, must adhere to stringent regulatory requirements regarding the accuracy and completeness of its financial reporting. The pressure to meet investor expectations and maintain market confidence can create an environment where management might be tempted to overlook or downplay potential risks. The core of the challenge lies in balancing the need for transparency and compliance with the desire to present a positive financial outlook. Careful judgment is required to ensure that risk assessment is conducted objectively and that all material risks are identified and appropriately disclosed, even if they are unfavorable. The correct approach involves a comprehensive and proactive risk assessment that considers all potential internal and external factors impacting Groupe SEB's financial performance. This includes not only identifying known risks, but also anticipating emerging threats and assessing their potential impact. This approach is professionally sound because it aligns with the principles of good corporate governance and regulatory compliance. Specifically, it upholds the duty of care owed to shareholders and other stakeholders by ensuring they receive accurate and timely information. Regulatory frameworks, such as those governing financial reporting and disclosure, mandate that companies identify and report material risks. Ethically, it reflects integrity and transparency, fostering trust in the company's operations and financial health. An incorrect approach that focuses solely on historical data without considering forward-looking indicators fails to meet regulatory expectations for risk assessment. Such an approach could lead to the omission of material risks that are developing, but have not yet manifested in historical figures, thereby misleading stakeholders. Another incorrect approach that prioritizes short-term financial gains over robust risk identification would be ethically and regulatorily unsound. This would demonstrate a disregard for the long-term sustainability of Groupe SEB and a failure to uphold the duty to inform stakeholders of potential threats. Furthermore, an approach that relies on anecdotal evidence or informal discussions rather than systematic analysis would lack the rigor required for a credible risk assessment, potentially leading to the overlooking of significant risks and a breach of professional standards. Professionals should employ a decision-making framework that begins with understanding the specific regulatory obligations applicable to Groupe SEB. This involves consulting relevant financial reporting standards and corporate governance guidelines. The next step is to establish a systematic process for risk identification, which should involve input from various departments and levels within the organization. This process must include both quantitative and qualitative assessments of identified risks, considering their likelihood and potential impact. Finally, decisions regarding risk disclosure and mitigation strategies should be made based on objective analysis and in strict adherence to regulatory requirements and ethical principles, ensuring that all material information is communicated transparently to stakeholders. Question 13. Compliance review shows that Group SEB's approach to assessing operational risks across its international subsidiaries has been inconsistent, with some regions implementing highly detailed risk matrices, while others rely on more general qualitative assessments. Considering the need for a globally consistent yet locally relevant risk management framework, which of the following approaches best aligns with regulatory expectations for a multinational corporation like Group SEB? Option A. Implement a standardized global risk assessment framework that sets minimum requirements for risk identification and evaluation, allowing subsidiaries to supplement this with region-specific risk factors and controls based on local regulatory obligations and operational nuances. Option B. Decentralize all risk assessment responsibilities to individual subsidiaries, providing only general guidance and allowing each to develop its own unique methodology and reporting standards. Option C. Mandate that all subsidiaries adopt the most comprehensive risk assessment methodology currently in use by any single Group SEB subsidiary, regardless of local regulatory requirements or operational scale. Option D. Rely on a generic, high-level risk assessment framework that focuses on broad categories of risk, assuming that specific local risks will be adequately addressed through general business operations. The correct answer is A. Implement a standardized global risk assessment framework that sets minimum requirements for risk identification and evaluation, allowing subsidiaries to supplement this with region-specific risk factors and controls based on local regulatory obligations and operational nuances. Explanation. This scenario presents a professional challenge because Group SEB, as a global company, must navigate the complexities of differing regulatory expectations and ethical standards across its various operating regions. The core difficulty lies in identifying and implementing a risk assessment approach that is both robust enough to meet stringent compliance requirements and adaptable to the specific operational context of each subsidiary, without compromising the company's overall integrity or exposing it to undue regulatory scrutiny. A superficial or overly generalized approach risks overlooking critical, region-specific risks, while an overly complex or inconsistent approach can lead to operational inefficiencies and compliance gaps. The correct approach involves a tiered risk assessment methodology that begins with a global framework setting minimum standards and then allows for subsidiary-level customization based on local regulatory landscapes, market dynamics, and operational realities. This ensures that Group SEB maintains a consistent baseline of compliance and ethical conduct worldwide, while also addressing unique risks pertinent to each market. This approach is justified by the principle of proportionality in risk management, which dictates that controls should be commensurate with the identified risks. Furthermore, it aligns with best practices in corporate governance, emphasizing a risk-based approach to compliance that is both effective and efficient. Regulatory frameworks often mandate that companies identify, assess, and manage risks relevant to their operations, and a tiered approach allows for this granular yet coordinated oversight. An approach that relies solely on a generic, one-size-fits-all risk assessment framework fails to acknowledge the diverse regulatory environments in which Group SEB operates. This can lead to non-compliance with specific local laws and regulations, exposing the company to fines, reputational damage, and operational disruptions. For instance, a framework that doesn't account for specific data privacy laws in one region or anti-bribery regulations in another would be fundamentally flawed. Another incorrect approach would be to delegate risk assessment entirely to individual subsidiaries without any central oversight or standardized methodology. This can result in inconsistent risk identification, varying levels of control implementation, and a lack of consolidated view of Group SEB's overall risk profile. This fragmentation can create blind spots and make it difficult to identify systemic risks or to share best practices across the organization. A third incorrect approach might be to adopt the most stringent regulatory framework from any single jurisdiction and apply it universally. While seemingly cautious, this can lead to unnecessary compliance burden and operational inefficiencies in regions with less demanding regulatory environments, diverting resources from more critical risk areas. It fails to recognize that regulatory requirements are designed to address specific risks within particular contexts. The professional decision-making process for similar situations should involve a thorough understanding of Groupe SEB's global operations and the regulatory frameworks applicable in each key market. It requires collaboration between central compliance functions and local management to identify material risks. The process should prioritize a risk-based approach, focusing resources on areas of highest potential impact. Regular review and adaptation of the risk assessment methodology are crucial to ensure its continued relevance and effectiveness in a dynamic global environment. Question 14. Process analysis reveals that Groupe SEB is considering a new supplier for a critical component of its product line. This supplier is based in a region with varying regulatory enforcement and has a history of minor labor disputes, though no major legal violations have been publicly reported. Groupe SEB's internal guidelines emphasize ethical sourcing and compliance with all applicable laws and regulations. Which of the following approaches best aligns with Groupe SEB's commitment to responsible business practices and regulatory adherence in this supplier selection scenario? Option A. Proceed with the supplier based on their competitive pricing and established presence in the market, assuming their operations are compliant. Option B. Select a different supplier from a region with more stringent and consistently enforced regulations, even if it means higher costs and a less efficient supply chain. Option C. Rely on the supplier's self-certification of compliance without independent verification, given the time constraints of the selection process. Option D. Conduct a thorough risk assessment that includes evaluating the supplier's labor practices, environmental impact, and adherence to ethical standards, alongside their pricing and operational capabilities. The correct answer is A. Proceed with the supplier based on their competitive pricing and established presence in the market, assuming their operations are compliant. Explanation: this scenario is professionally challenging because it requires Groupe SEB to balance its commitment to ethical conduct and regulatory compliance with the practicalities of managing third-party relationships. The risk assessment process is crucial for identifying potential vulnerabilities and implementing appropriate controls before issues arise. A robust risk assessment must consider not only the direct actions of Groupe SEB, but also the indirect risks introduced by its supply chain partners. The correct approach involves a proactive and comprehensive risk assessment that systematically identifies, analyzes, and evaluates potential risks associated with the chosen supplier. This includes understanding the supplier's own compliance framework, their history of ethical conduct, and the specific risks inherent in their operations that could impact Groupe SEB's reputation or regulatory standing. By prioritizing due diligence and ongoing monitoring, Groupe SEB demonstrates a commitment to responsible sourcing and adherence to its own internal policies and any relevant industry codes of conduct. This approach aligns with the principles of good corporate governance and risk management, ensuring that Groupe SEB does not inadvertently become complicit in unethical or non-compliant practices. An incorrect approach would be to solely focus on the immediate cost-effectiveness of the supplier without adequately assessing the associated risks. This oversight could lead to significant reputational damage, regulatory penalties, or operational disruptions if the supplier engages in practices that violate laws, ethical standards, or Groupe SEB's own values. Another incorrect approach would be to assume that because a supplier is established, they are inherently compliant, neglecting the need for specific due diligence tailored to the nature of the business relationship and the supplier's operational context. This assumption bypasses essential risk identification and mitigation steps. Finally, an approach that delays or avoids a thorough risk assessment due to time or resource constraints is also professionally unsound, as it prioritizes expediency over due diligence, potentially exposing Groupe SEB to greater long-term liabilities. Professionals should employ a structured risk assessment framework that begins with defining the scope of the assessment, identifying potential risk categories, e.g., ethical, operational, financial, regulatory, assessing the likelihood and impact of each identified risk, and then developing appropriate mitigation strategies. This process should be iterative and integrated into the supplier selection and management lifecycle. Question 15. Compliance review shows that Groupe SEB's approach to assessing potential risks associated with new product launches in its primary operating jurisdiction has been inconsistent, with some departments relying on informal checklists and others on detailed but unverified historical data. Which of the following represents the most appropriate risk assessment approach for Group SEB to adopt moving forward? Option A. Implement a standardized, documented risk assessment framework across all product development teams, incorporating both qualitative and quantitative analysis of potential risks, with clear escalation procedures for identified high-risk areas. Option B. Delegate all risk assessment responsibilities to external consultants without establishing internal oversight or validation processes. Option C. Focus risk assessments solely on the financial implications of product failures, as this is the most direct measure of business impact. Option D. Continue with the current decentralized approach, allowing each department to develop its own risk assessment methods based on perceived needs and available resources. The correct answer is A. Implement a standardized, documented risk assessment framework across all product development teams, incorporating both qualitative and quantitative analysis of potential risks, with clear escalation procedures for identified high-risk areas. Explanation: this scenario presents a professional challenge because Group SEB, as a global company, must navigate the complexities of risk assessment across diverse operational environments. The challenge lies in ensuring that risk assessment methodologies are not only robust, but also adaptable to varying regulatory landscapes and business contexts, while maintaining a consistent ethical standard. A failure to do so could lead to regulatory breaches, reputational damage, and financial losses. The correct approach involves a proactive and integrated risk management strategy. This means establishing clear internal policies and procedures for risk identification, assessment, and mitigation that are aligned with Group SEB's overall business objectives and ethical framework. It requires ongoing monitoring and review to ensure effectiveness and compliance with relevant regulations, which in this context would be those governing the Group SEB's operations within its specified jurisdiction. This approach ensures that potential risks are identified early, understood thoroughly, and managed effectively, thereby safeguarding the company's interests and upholding its commitment to responsible business practices. An incorrect approach that relies solely on reactive measures would be professionally unacceptable. This would involve waiting for incidents to occur before assessing risks, which is a failure to meet the proactive requirements of effective risk management and regulatory compliance. Such a reactive stance demonstrates a lack of foresight and can lead to significant unforeseen consequences. Another incorrect approach would be to adopt a fragmented risk assessment process that is not standardized across different business units or geographical locations. This can lead to inconsistencies in risk identification and mitigation, creating blind spots and increasing the likelihood of non-compliance with specific jurisdictional requirements. It undermines the principle of a unified and comprehensive risk management system. A third incorrect approach would be to focus exclusively on financial risks while neglecting operational, compliance, or reputational risks. While financial stability is crucial, a narrow focus can leave Group SEB vulnerable to other significant threats that could impact its long-term sustainability and ethical standing. The professional decision-making process for similar situations should involve a systematic evaluation of potential risks, considering their likelihood and impact. This should be guided by established risk management frameworks and internal policies, with a clear understanding of the regulatory environment. Professionals should prioritize a proactive, integrated, and comprehensive approach, ensuring that all relevant risk categories are considered and that mitigation strategies are effectively implemented and monitored. Continuous learning and adaptation to evolving risks and regulations are also paramount. Question 16. Compliance review shows that Group SEB is considering entering a new emerging market with a novel product line. Which of the following approaches to risk assessment would best ensure responsible market entry and adherence to best practices? Option A. Outsource the entire risk assessment process to an external firm, accepting their findings without significant internal review or integration into Group SEB's strategic planning. Option B. Expedite the market entry process by conducting a high-level overview of potential risks, focusing on immediate operational concerns to meet aggressive launch timelines. Option C. Rely primarily on historical data from similar product launches in developed markets to predict potential risks, assuming the new market will present comparable challenges. Option D. Conduct a thorough risk assessment that identifies potential operational, financial, reputational, and compliance risks, evaluates their likelihood and impact, and develops tailored mitigation strategies involving cross-functional teams. The correct answer is D. Conduct a thorough risk assessment that identifies potential operational, financial, reputational, and compliance risks, evaluates their likelihood and impact, and develops tailored mitigation strategies involving cross-functional teams. Explanation: this scenario is professionally challenging because it requires Group SEB to balance the need for efficient risk management with its ethical and regulatory obligations. The core tension lies in identifying and mitigating potential risks associated with new market entry without stifling innovation or creating undue burdens. A robust risk assessment framework is crucial for making informed decisions, ensuring compliance, and protecting the company's reputation and financial stability. The correct approach involves a comprehensive and proactive risk assessment that considers both quantitative and qualitative factors. This includes identifying potential risks across various domains: operational, financial, reputational, legal, and compliance, assessing their likelihood and impact, and developing appropriate mitigation strategies. This aligns with general principles of good corporate governance and the implicit expectations of regulatory bodies that companies operate with due diligence and foresight. Specifically, it demonstrates a commitment to identifying and managing risks before they materialize, which is a cornerstone of responsible business conduct and a key element of any effective compliance program. An approach that focuses solely on historical data without considering emerging trends or future uncertainties is professionally unacceptable. This failure stems from a limited view of risk, ignoring the dynamic nature of business environments and the potential for unforeseen events. It can lead to a false sense of security and leave Group SEB vulnerable to new or evolving threats. Another incorrect approach is to prioritize speed of market entry over thorough risk evaluation. This demonstrates a disregard for due diligence and can result in significant financial losses, reputational damage, and regulatory penalties. It suggests a culture where short-term gains are valued above long-term sustainability and compliance, which is ethically unsound and professionally negligent. A third flawed approach is to delegate risk assessment entirely to external consultants without internal oversight or integration into Group SEB's strategic decision-making. While external expertise can be valuable, ultimate responsibility for risk management rests with the company's leadership. This approach risks a disconnect between the assessment and the actual implementation of mitigation strategies, potentially leading to a superficial understanding of risks and ineffective controls. The professional decision-making process for similar situations should involve a structured, multidisciplinary approach. This includes 1. Clearly defining the scope and objectives of the risk assessment. 2. Engaging relevant stakeholders from different departments, e.g., legal, finance, operations, marketing. 3. Utilizing a combination of data-driven analysis and expert judgment. 4. Documenting the entire process, including identified risks, their assessments, and mitigation plans. And 5. Establishing a system for ongoing monitoring and review of risks and the effectiveness of mitigation measures. This ensures that risk assessment is an integrated and continuous part of Group SEB's business operations. Question 17. Upon reviewing a proposal from a new potential supplier for a critical component for Group SEB's upcoming product launch, what is the most prudent approach to assessing the associated risks? Option A. Prioritize the speed of onboarding and contract finalization to meet the product launch deadline, deferring any in-depth risk assessment until after the initial supply agreement is in place. Option B. Accept the supplier's assurances and their provided risk assessment documentation at face value, focusing primarily on the competitive pricing offered. Option C. Request a brief overview of the supplier's risk management policies and accept their statement that they have robust internal controls in place without further verification. Option D. Conduct a comprehensive due diligence process that includes an independent evaluation of the supplier's operational capabilities, financial stability, and compliance with relevant industry standards, alongside their proposed risk mitigation strategies. The correct answer is D. Conduct a comprehensive due diligence process that includes an independent evaluation of the supplier's operational capabilities, financial stability, and compliance with relevant industry standards, alongside their proposed risk mitigation strategies. Explanation: This scenario presents a professional challenge for a Group SEB employee because it requires balancing the company's operational needs with the ethical imperative to conduct thorough risk assessments. The challenge lies in identifying potential risks that might not be immediately obvious or that could have cascading effects on Group SEB's reputation, financial stability, or compliance. Careful judgment is required to move beyond superficial assessments and delve into the underlying causes and potential consequences of identified risks. The correct approach involves proactively identifying and evaluating potential risks associated with a new supplier relationship for Group SEB. This entails a systematic process of understanding the supplier's operations, their own risk management practices, and how these could impact Group SEB. Regulatory and ethical justification for this approach stems from the general principles of good corporate governance and due diligence, which are implicitly expected in any professional hiring assessment. While specific Group SEB internal policies are not provided, the expectation is that employees will act with integrity and prudence, safeguarding the company's interests. This proactive stance aligns with the ethical duty to prevent harm and ensure responsible business practices. An incorrect approach of solely relying on the supplier's self-assessment fails to meet the standard of due diligence. It is professionally unacceptable because it abdicates responsibility for independent verification and leaves Group SEB vulnerable to risks the supplier may have overlooked or intentionally downplayed. This could lead to regulatory breaches if the supplier's noncompliance indirectly affects Group SEB's obligations, or ethical breaches if it results in association with unethical practices. Another incorrect approach of prioritizing cost savings above all else, without adequate risk consideration, is professionally unsound. This demonstrates a short-sighted focus that disregards potential long-term liabilities. The ethical failure here is prioritizing immediate financial gain over the sustained well-being and integrity of Group SEB. This could expose the company to significant financial penalties, reputational damage, and operational disruptions if the chosen supplier proves unreliable or non-compliant. The professional decision-making process for similar situations should involve a structured risk management framework. This begins with identifying potential risks, followed by assessing their likelihood and impact. Mitigation strategies should then be developed and implemented. Crucially, continuous monitoring and review are essential to adapt to changing circumstances. Professionals should always ask, what could go wrong, and what are the consequences for Group SEB and its stakeholders? This critical questioning, coupled with a commitment to ethical conduct and regulatory compliance, forms the basis of sound professional judgment. Question 18. System analysis indicates that Group SEB's compliance department is tasked with identifying emerging regulatory risks. Which of the following approaches would be most effective and compliant with a risk-based regulatory framework? Option A. Conducting a targeted risk assessment focusing on business units or product lines that have recently experienced significant operational changes or are subject to new regulatory frameworks. Option B. Performing a complete review of all existing policies and procedures across the entire company, irrespective of recent changes or specific risk indicators. Option C. Focusing solely on risks that have already resulted in past regulatory breaches or incidents. Option D. Relying exclusively on historical data and past audit findings to identify potential compliance issues. The correct answer is A. Conducting a targeted risk assessment focusing on business units or product lines that have recently experienced significant operational changes or are subject to new regulatory frameworks. Explanation. Scenario analysis. This scenario is professionally challenging because it requires Group SEB's compliance team to balance the need for proactive risk identification with the practical limitations of resource allocation and the potential for overregulation. Identifying emerging risks is crucial for maintaining regulatory adherence and protecting the company's reputation. But an unfocused or overly broad approach can lead to wasted effort and a diluted impact on genuinely significant threats. The team must exercise sound judgment to prioritize effectively. Correct approach analysis. The correct approach involves a targeted risk assessment that focuses on specific business units or product lines within Group SEB that have recently undergone significant changes or are exposed to novel regulatory environments. This approach is justified by regulatory principles that emphasize proportionality and a risk-based methodology. For instance, regulations often require firms to allocate resources to areas where the risk of non-compliance is highest. By concentrating on areas with recent changes or new regulatory exposure, Group SEB can ensure that its assessment is relevant, efficient, and addresses the most pertinent compliance challenges, thereby demonstrating a commitment to robust risk management as expected by regulatory bodies. Incorrect approach is analysis, an approach that involves a comprehensive, company-wide review of all existing policies and procedures without regard to recent changes or specific risk indicators, is incorrect. This is inefficient and fails to adhere to a risk-based approach, potentially diverting resources from more critical areas. It does not demonstrate a targeted effort to identify emerging risks, which is often a regulatory expectation. Another incorrect approach would be to solely rely on historical data and past audit findings to identify risks. While historical data is valuable, it may not capture new or evolving risks that have emerged due to market shifts, technological advancements, or new legislation. Regulatory frameworks typically encourage forward-looking risk assessment. Finally, an approach that focuses only on risks that have already materialized and led to past breaches is reactive rather than proactive. While learning from past mistakes is important, effective risk management requires anticipating future potential issues before they cause harm or regulatory scrutiny. This approach would fail to identify emerging threats. Professional reasoning. Professionals should adopt a dynamic and iterative risk assessment process. This involves understanding the current regulatory landscape relevant to Group SEB's operations, identifying key business drivers and potential areas of change, and then mapping these to potential compliance risks. A structured framework such as identifying triggers for reassessment, e.g., new product launches, significant market changes, new regulatory pronouncements, helps ensure that risk assessments are timely and relevant. Prioritization should be based on the potential impact and likelihood of identified risks, aligning with the principle of allocating resources where they are most needed to ensure compliance and mitigate potential harm. Question 19. Market research demonstrates that a Group SEB employee, while conducting routine competitor analysis, observes a significant and unusual trading pattern in the stock of a key supplier that appears to be directly correlated with an upcoming product launch announcement by Group SEB. The employee believes this pattern might indicate potential insider trading activity related to Group SEB's confidential launch plans. Which of the following is the most appropriate course of action for the Group SEB employee? Option A. Discuss the observed trading pattern and its potential implications with trusted colleagues outside of the compliance department to gauge their opinions. Option B. Initiate personal trades in the supplier's stock, anticipating a price movement based on the observed pattern and the upcoming Group SEB announcement. Option C. Share the observation about the unusual trading pattern with an external financial advisor for their assessment and potential action. Option D. Immediately report the observed trading pattern and the potential connection to the upcoming Group SEB product launch to the company's compliance department and legal counsel. The correct answer is D. Immediately report the observed trading pattern and the potential connection to the upcoming Group SEB product launch to the company's compliance department and legal counsel. Explanation. This scenario presents a professional challenge for a Group SEB employee due to the inherent conflict between identifying potential market opportunities and adhering to internal compliance policies designed to prevent insider trading and market manipulation. The need for careful judgment arises from balancing the desire to leverage information for the company's benefit with the strict regulatory and ethical obligations to maintain market integrity and fairness. The correct approach involves a structured internal reporting mechanism that prioritizes compliance and regulatory adherence. This approach is right because it acknowledges the sensitive nature of the information and ensures it is handled through appropriate channels. Specifically, it aligns with the principles of market abuse regulations, which prohibit the misuse of inside information. By reporting the observation through the designated compliance channels, the employee is fulfilling their duty to alert the relevant internal stakeholders, who can then assess the information's materiality and potential regulatory implications, ensuring that any subsequent actions are taken in full compliance with applicable laws and internal policies. This process safeguards against potential insider trading or other market misconduct. An incorrect approach of directly acting on the observed market anomaly without internal consultation is professionally unacceptable. This failure stems from a disregard for insider trading regulations, which strictly prohibit individuals from trading securities based on material non-public information. Such an action would expose both the individual and Groupe SEB to significant legal penalties, reputational damage, and regulatory sanctions. Another incorrect approach of sharing the observation with external parties before internal reporting is also professionally unacceptable. This breaches confidentiality agreements and insider trading laws. Disclosing such information externally, even with good intentions, could inadvertently lead to market manipulation or insider trading by others, creating a severe compliance and legal risk for Groupe SEB. The professional decision-making process for similar situations should involve a clear understanding of the company's compliance policies and relevant market regulations. When encountering potentially market-sensitive information, the first step should always be to consult internal compliance departments or designated reporting lines. This ensures that any information is assessed and acted upon in a manner that upholds regulatory requirements and ethical standards, thereby protecting both the individual and the organization. Question 20. Examination of the data shows that Groupe SEB's internal audit team has identified a significant operational issue that, if it escalates, could materially impact the company's financial results and its ability to meet contractual obligations. The audit team has documented the potential risk and its potential consequences, but has not yet formally alerted senior management or the legal department. What is the most appropriate immediate next step for the internal audit team? Option A. Inform select members of the operations team to begin immediate remediation efforts without involving senior management or legal. Option B. Continue to monitor the situation internally and gather more data, delaying formal notification to senior management until the full extent of the problem is understood. Option C. Immediately escalate the findings and potential risk assessment to Groupe SEB's senior management and legal counsel for their review and guidance on disclosure obligations. Option D. Prepare a preliminary public statement about the potential issue, anticipating the need for market disclosure. The correct answer is C. Immediately escalate the findings and potential risk assessment to Groupe SEB's senior management and legal counsel for their review and guidance on disclosure obligations. Explanation. This scenario presents a professional challenge because Groupe SEB, as a publicly listed company, is subject to stringent regulatory requirements regarding the disclosure of material information. The internal audit team has identified a potential risk that, if realized, could significantly impact the company's financial performance and stock price. The challenge lies in balancing the need for timely and accurate disclosure with the potential for market speculation, and the need for internal investigation and remediation before public announcement. Careful judgment is required to determine the appropriate course of action in accordance with regulatory frameworks. The correct approach involves immediately escalating the findings to the appropriate senior management and legal counsel within Groupe SEB. This ensures that the potential risk is formally recognized at the highest levels of the organization. These individuals are responsible for assessing the materiality of the risk and initiating the process for timely and accurate disclosure to the market, as mandated by relevant securities regulations. This proactive engagement with senior leadership and legal experts is crucial for compliance and for managing potential market impact effectively. An incorrect approach would be to delay reporting the findings to senior management, hoping the issue resolves itself or can be contained internally without external notification. This failure to escalate promptly could lead to a breach of disclosure obligations if the risk materializes and is deemed material. Another incorrect approach would be to attempt to manage the situation solely at the internal audit level without involving legal or senior management, thereby bypassing established corporate governance and compliance protocols. This could result in inadequate assessment of materiality and a failure to meet disclosure timelines. Finally, an approach that involves selectively disclosing information to certain parties before a public announcement would constitute insider trading and a severe breach of regulatory and ethical standards. Professionals should adopt a decision-making framework that prioritizes adherence to regulatory requirements and ethical conduct. This involves a clear understanding of disclosure obligations, a commitment to transparency, and a process for escalating significant findings to the appropriate authorities within the organization. When faced with potential material risks, the immediate step should be to document findings thoroughly, consult with legal and compliance departments, and follow established internal procedures for reporting and disclosure.